right, joining us now, great financial journalist, daily journalist, Mr. John Carney. John, welcome back. So we're exploring gold. Last night on the show, Art Laffer basically said that the Trumpian economic policies, supply-side policies, pro-growth, will eventually, counter-inflationary, will eventually knock down the price of gold. That was his forecast over the next couple of years. It's interesting, this morning, Wall Street Journal, we'll put it on the full screen, James McIntosh, columnist for the Journal, if you're worried about a gold inflation signal, the bond market disagrees. Now, we put up on the chart how the commodity markets disagree also, but we'll put it up there. Let's see, which one we're going to run first. 30-year treasuries, so they start out the year at about 5% and are currently less than 5%, right?
Right, not
so no explosion,
story.
Right? And then we have the five-year forwards, which is long-run inflation expectations. It's an indicator Steve Myron uses. It starts out the year about 230, 2.30, and it's today about 2.30. So bonds. So if you think the gold thing is an inflation call, bonds are saying it's not.
I think that's right. I think initially the bond rally or the gold rally began as an inflation call. If you look back to when the Fed cut 50 basis points in September of last year, yes, people started to say, uh-oh, this looks too soon. Maybe we should start to stock up on gold. Why has it continued to go up? It's up 52% this year. I don't think that's an inflation call. I do think it is central banks buying more gold.
Yep.
And a big part of that has China is playing a large role, buying lots of gold. But also not just China. Central banks all around the world are buying gold. One of the things that I think is feeding that is, a reduction in U.S. trade deficits is coming. The Trump trade policy will work. That will leave fewer dollars in people's hands, which means less dollars to buy U.S. treasuries. I also think that people are a little worried about what they saw happen to Russia. If you put on intense financial sanctions like we did with Russia, then you scare people to say, because look, when people hold treasuries or they hold dollars, they're not really holding them at all. They exist on computers in the New York Federal Reserve. And we can freeze that instantly. We can just say you don't have any more. When people hold gold in London, primarily in London, or the New York Fed, the two biggest gold custodians in the world are the New York Fed, #1, the Bank of England, #2. China wants to be a player in that. They're not really yet. But when you hold gold, at least you can diversify a little. You hold some in London, you hold some in New York, and you're not worried about about Washington, D.C. shutting down your access.
China, at the peak, about 2011 or 2012, China owned 1.3 trillion in U.S. Treasury paper, bonds. They're down to 750 billion, if I get the right number, 730 billion. So in the last, we'll call it the last dozen years, China has cut its holdings, its exposure to U.S. treasuries, which is dollars, by half.
Right.
That's a lot. I think they're doing it. You're right, they don't want us to freeze their assets, but they don't want the dollar to be so strong. They don't want the U.S. to be so. I mean, I think it's a play. This gold explosion, I think, says more about the dollar and America's strength around the world than it does about the inflation rate in the next 12 or 24 months. Now, maybe I'm wrong about that, and maybe I'll be proven wrong about that. But that's kind of what I think.
I do think that there is a big part of that. China definitely would love to see gold go even higher. One, because they have a lot of it. They're a big investor in gold. So they would like to see gold go higher. They don't care about their currency. Their currency has declined against gold just as much as the U.S. dollar.
Yeah.
Right. So they don't care about that at all. We actually know that they used to suppress their currency's value. So they still will if it becomes. There's an argument that they actually are doing that right now. One of the when they buy lots of gold, that puts more yuan out into the market. That drops the dollar of the yuan, makes their exports better. But what I would say is yes, there are people around the world are wondering who will be the leader in the future.
Yeah.
And they're saying, well,
they don't like us.
They want to hedge.
People.
They want to hedge. They say, let's have some gold in case it's not the U.S. The job of U.S. leadership actually should be to teach the rest of the world, we are going to be the leaders. Right. We are the trustworthy leader. You cannot trust China.
And that, by the way, I think is what Laffer was trying to get at last night. That Trump, Trump in the Middle East is a terrific sign. It's a show of strength. but it's also a great peace, diplomatic peace victory. That's a plus. Perhaps much more is coming. But I think that's exactly right. He can fix this. I'd like to see Treasury man Scott Bessent. I'd like to hear a little King Dollar from him.
I think we should hear
King Dollar. How
I
about
do
that?
think we should have Bessent talk about gold, talk about dollars, talk about commodities.
Yes.
These are things that Treasury secretaries historically have talked about a lot. Bessent can do it.
You can do it. I know. Little King Dollar goes a long way.
King Dollar.
John Carney, thank you ever so much. Appreciate it, buddy.